The brutal truth is the entire financial guru ecosystem is built on selling shortcuts that don't exist. Building wealth is not sexy or fast. It's disciplined and consistent. Anyone that's telling you that you can build wealth overnight, it's just full of it. It doesn't exist. It doesn't happen. What's up, everybody? This is Mike Preston at New Harbor Financial Group. And today we're going to do something a little bit different, try to have a little bit of fun. You know what keeps me up at night? The financial advice that goes viral. Particularly bad financial advice that goes viral. Some of it's good, but a lot of it really is bad. Today, I'm going to look at some social media. I'm going to react to some short video clips. Hopefully, we're going to have a little fun, and if we're lucky, maybe we'll learn something. After 26 years as a financial analyst, I've developed a finely tuned radar for baloney, for financial nonsense. While TikTok experts are chasing views, I've been helping individuals and families have less anxiety, to live a more stress-free life with their money. That's our purpose. That's what we focus on. So let's separate fact from fiction and make sure you're not flushing your money down the toilet.
Gold is not an investment at all. Gold, to go back to where we started, Poppy, is a speculation. It has absolutely no underlying intrinsic value. You know, bonds are ultimately supported by interest coupons. Stocks are supported by dividend yields and earnings growth. And gold is supported by, well, the ability to think somebody else is going to take it off your hands for more than you paid for it. It doesn't have an internal rate of return. So it's a speculation. Is it a good speculation today? I don't know that I'd be much of an expert on that, but it's gone so high so far that I'd be very skeptical of it. But if you really are bitten by the gold bug, and it seems like an awful lot of people have been bitten by the gold bug, and if you want to speculate, maybe 1 or 2 or 3 or even 5% of your assets in gold is not the worst idea in the world, but I wouldn't do it myself, and I wouldn't advise most investors to do it.
Well, the one thing I agree with that I think he said that's very good is that you might want to have 1 or 3 or 5% in gold. I'd suggest 5%. In fact, we think 5 to 10% of your investable assets make a lot of sense. One thing a lot of people don't know is that gold has actually outperformed the stock market over most recent periods of time. Go back to the turn of the century, which hard to believe, but it's 25 years ago now. Gold has actually done better than stocks in aggregate, and we think it's going to hold up better in what we think is a likely coming crash of financial assets. So I don't agree with this person when he says there's no intrinsic value. Gold and silver as well are used in industry. There is an intrinsic value. It's true that they don't pay a dividend. If you look at the performance and if you look throughout history, gold and silver has always been money. And we are so far removed from reality at this point with fiat money around the world that I feel better owning something real. And I can tell you that other major central banks in the world feel the same way because they've been buying hand over fist for the last bunch of years. So I don't agree at all that gold is a bad idea. I don't agree it's a complete speculation. I think it's a prudent investment, and I think people should have 5 to 10% of their assets there.
You said a home is a terrible investment.
It is a terrible investment. Doesn't cash flow. You don't get big tax write-offs because of it. You have no leverage. You're living in it. You're paying for it. You never own it. Even when the loan's paid, you don't own it.
Really?
No, you still got to pay property taxes. Still got to insure it. Still got to maintain it. If you just break it down and don't become emotional, because people get emotional about their house. This is my house. It ain't your house. You're a partner in this house with the state.
Your recommendation to a normal family would be to rent?
Never buy a house. Rent where you live. Take all your money and invest in properties that cash flow. Okay. I'm not saying don't own real estate. I'm saying live in a house and pay rent. Take all the money that you would have spent on that house and invest in real estate that cash flows, that pays you every month. Could be retail, storage, apartment buildings like we invest in. Could be land. If you're a farmer or a rancher and you know how to get cows to cash flow, then do that.
I mean, overall, his point is well taken here. He's saying invest in things that provide income. And that makes a lot of sense. Invest in investment property that provides income. But he's telling people never buy a house. I definitely don't agree with that, to be honest. I think that he can probably make a good argument mathematically that you might be better off to use the leverage that you can get by not buying your own house and buy other investment properties. But here's the thing. A lot of these financial media gurus talk about the pure mathematics as if that's all that matters, just a black and white, pure mathematical presentation. But there's so much more than that. You have to marry one's psychology with these concepts to have real life success. The truth is, most people won't do this. Either they can't do it or they won't do it. Doesn't mean don't give advice, but to blanket say never buy a house, I think is bad advice. If I had to guess, I'd say that more than half of the people at retirement haven't really saved adequately. But guess what? If they bought a house, they at least have that. You can sell the house, you can do a reverse mortgage on the house. And I know that not all times in the future will be equal to the last 20 years or 30 years, but home prices have increased at more than the rate of inflation. They have been a good investment. And if it's a brainless way to have a nest egg when you approach retirement, I'm all for it. So like almost everything that you see online, just be careful. Nothing is black and white, and I disagree with this.
19-year-old millionaire made $8,000 in 2 hours.
The chart is moving. Look at the chart. We just caught a breakout. Ascending wedge. Oh my God, it's still ripping. $8,000 up, chat. Let's get it, baby. Oh, look, 8.6K up. That's literally almost $9,000, guys. I'm literally making that right now. My position's up 54%, and I bought this 2 hours ago. 54% on your return in just 2 hours. And I've had crazier ones where they go up 500% in 30 minutes.
All right, so this is really bad advice. You know, this messaging is that anybody can do this. You can have a white, whatever that was, a Lamborghini as well. It's that easy. You can go up 54% in a matter of hours. You can indeed go up 54% in a matter of hours using leverage and options and things like that in the market. But you better understand what you're doing. And more than anything, you better understand who you are, because you are going to make a mistake if you try this. You know, just go to Reddit, the Wall Street Bets, read some of the things there. People are YOLOing into stocks and options, and some of them are getting really rich, and a lot more of them are just crashing and burning. So nothing like this comes easy. I've been doing this nearly 30 years, and it took years and years and years, not only to understand the concepts and the skills about investing, but also learn who I am. And that's the most important thing. And then, you know, once I learned that, I had to learn how to apply that to clients and others that look for help, because really you need to marry the science and the math of all this with the psychology, with goals. It's not an easy thing. And when you look at this video, this young person, unfortunately, seems to remind me of a lot of young people and my own kids, and they want something quickly and without a lot of effort. And that's the bubble we're living in. And that's not reality. And if you try to do that, you will find out the hard way who you are. And in that, there's a silver lining. You have to pay the price to get the experience. So nothing comes easy. Ultimately, that is the message here. I don't think this is a good video for most people to watch. All right, just a quick note. I've checked our analytics, and about 70% of you that are watching this are not subscribed to our channel. Well, please click below, subscribe to our channel, and we're going to continue to produce valuable financial insight and analysis. Don't miss out on building your financial knowledge. Please subscribe now, and we'll get right back to the video.
What's your best advice if I want to get a girlfriend?
And work at a bank, because then you have access in front of their profile. You get to see their transactions, learn your habits.
This is like Stalker 101.
Dates. So by then you actually create conversation according to what you see in their profile, and then you take them on the first date.
That's ridiculous. You know, he's talking about screening for dates, you know, based on their financial profile. That's not love. That's baloney. I mean, I can't imagine a worse way to try to find a partner, to be honest. I hope that this is a joke. I'm not sure, but really, really bad. And for the women out there, if you encounter this guy, run the other way.
Every single time I see a pattern like this one, I know I'm about to make around $415,000 like I just did. Let me explain. GBP CHF hit a low point into the market. We created a major accumulation where we created the final lower low, lower high, and then we shifted bullish. This right here is not only a shift of structure, but it is also known as a break and retest. The market broke this area, leaving all of this liquidity, and then we came back, retested all of this liquidity, gave us our bullish engulfing, and then we had a beautiful 1 to 2.5 risk reward where it gave us $415,000.
Well, it's easy as that, people, right? Just as easy as that. It's always easy in hindsight. What that video doesn't show is what that feels like. Second to second, minute to minute, hour to hour. It's excruciating, and to have that type of leverage exposed. You're not going to make $415,000 unless you're risking $415,000 or more. That's the truth. He doesn't talk at all about loss control. Loss control is the most important thing. What are you going to do if the trade goes wrong? There's some good technical analysis aspects to that video. He talks about a cascading low and a retest and then a breakout. All of that makes sense and is real, but those are just signals. They're like signs on the highway. They don't tell you exactly where to go. They just tell you the speed limit, or they warn you about construction, or they tell you about a possible exit up ahead. But you are the master of your trades. You're driving these trades. You have to realize it's not that easy. If it was really that easy, it wouldn't even be a fair world. There would just be a few people in the world would have all the money if they had some kind of edge, if it was that easy. It's not that easy. The market is a more fair place than that. And how does it make it fair? By playing with your emotions, with your psychology. So be very, very careful. It takes time. It takes years. It takes mistakes. It takes experience. You're not going to do this overnight.
I would encourage people to really look into the penny stocks where you're paying a couple dollars or 50 cents or whatever. Within 5 or 6 months, that money will flip so fast. You'll be like, what? I've had some opportunities where I got into some crude oil. It was fluctuated. It was $3, $2. And I ended up kind of doing my research, and I found a competitor of it. They kind of had the same trend. When I seen them, they were down. One was like 39 cents. So I bought into it, right? I put 50 in both of them. I made like $2.3 million.
Holy crap.
Here's the crazy thing, though. I took some out before, but I waited after a full year because of tax purposes and all that. But I made like 2-1.
It's easy as that. Just buy a penny stock, put a lot of money into it, and make $2 million, right? Problem is that these types of videos show all kinds of biases. You know, this is a survivor bias. You're only seeing somebody that gambled big and won. What you have to really realize in this type of situation is that there's a lot of people that lost. Back when I started in this business, there was stories about unscrupulous stockbrokers. They would send a letter out to, 10 people, and 5 of them would have one stock pick and another 5 would have another stock pick. And the one that worked out really well, then now you've got 5 people that are really happy, and then you'd send more ideas to them, but you'd split that up too. And then you'd always ignore the losers. And then eventually you'd have 1 or 2 people that you've been right a bunch of times in a row. And maybe this story starts out with more than 10. Maybe you start with 100. And this video reminds me of that. It's like, it's just the survivor. It's the big winner that you're seeing here. And number one, you don't even know if the story is real. But if the story is real, there's a lot of others that lost, and you're only seeing the winner. It's like putting the Powerball winner on a video and say, look how easy it is to make $100 million. All you have to do is buy a ticket every Friday night or whatever. So it's kind of ridiculous. Again, there's no easy way to make money in the stock market. It is a really fantastic and interesting place, a place of infinite possibilities, but that's also the risk. Those infinite possibilities will test your psychology. Do your work, spend the time, talk to a professional. Happy to give you some tips if you'd like.
I can't write off a private chef, but if I invite somebody over every single night to have business meetings with me and I hire a private chef to cook the meals, I can write off the private chef and the food that went into making the meal. This is how I'm able to afford having that private chef every single year, every single month, every single day inside of my house, making me and my wife meals along with my friends, family members, and my business clients, who also some of my family members sit on my board of directors.
Oh boy, I'd be really careful about this one. This sounds a lot like tax advice. I don't want to give tax advice. I won't give tax advice. This gentleman is talking about the tax deductibility of a personal chef in his own house for him and his wife and his friends. It sounds a little bit fishy. It's true that you can deduct expenses related to a business, but you've got to prove to the IRS that it's a legitimate business purpose. I think this particular message, particularly this public message that this gentleman broadcasts, is risky, because I'm sure that some of that activity that's going on is not purely business, and it's going to be up to him to prove that it is. So therefore, I think it's bad advice, and the safe thing to do, talk to your tax advisor before doing anything like this. Look, I get it. Financial advice can be really boring. Save more, spend less, invest consistently over time. Snooze fest. Nothing interesting about that. It does not go viral like, hey, secret hack to make millions overnight, or even in an afternoon like one person showed. But here's what I want you to remember. Building wealth is usually a slow, consistent process. It's not sexy, but trust me, it works. If you see financial advice on TikTok that sounds too good to be true, it probably is. Do your research, consult professionals. With us, you can do it for free. And remember, that your financial journey is unique to you. If you found this helpful, hit the subscribe button. For more no-nonsense financial content, drop in the comments which financial TikTok trends you want me to react to next. This is Mike Preston from New Harbor Financial Group, helping you navigate the noise and build real wealth. See you next time. Thank you.